Yo, what is going on, everybody? Welcome to the channel. Got a good one for you all today. I'm going to be talking about Aladdin. It's an asset money manager that's responsible for more money than any country in the world. And not many people really know about it. So, thanks for tuning in. This will be Financial Education episode number 10. So, what if I told you that there is a computer algorithm that's responsible for $21 trillion in assets? To kind of put this number into perspective, America's GDP was only $20 trillion last year. And if you were to pile up every single dollar that's sitting in America today, it only adds up to 5 trillion. So this is four times that number. They work super close to the government, and the Federal Reserve oftentimes asks for guidance on where to put their printed money. It controls half of all ETFs, controls 200 banks and funds, 17% of the bond market, 10% of the stock market, and makes a quarter million trades a day. If I were to tell you all this, you might think I'm lying. You might think that this is some science fiction setup. You might even go as far to say, "What's up with all these Disney adaptations? Aladdin, what are you talking about, man?" But no, this is real life. This is a crazy topic, and not many people know about it. So let's dive right into it. It all starts in 1986 with a man named Lawrence Fink. He worked for a financial firm, and in the 80s, mortgage-backed securities were booming. This is actually what caused to the 2008 recession, but that's for another video. But this is a huge industry at the time, and it all started in 1986, where Larry followed a computer algorithm. He followed a trade that was made off, computers that were not very common at the time. He kind of went against the grain and ended up losing his company $100 million. So, as you can imagine, he was fired that day. Everybody looked down on him. He took the walk of shame, and everybody's like, "Look at this fool! Trusting a computer. Look at this fool." So, not even 2 years later, in 1988, he launched Blackrock, which would be the company, and then he gave birth to Aladdin, which would be the computer algorithm that the company owns. And now Aladdin stands for Asset, Liability, and Debt Derivative Investment Network. So basically, Larry was feeding every single algorithm he possibly could for stocks, bonds, investments, every single thing financial was getting fed to Aladdin, and it was running through databases, and it was coming up with this technical analysis that would help him, make decisions of losers and winners down the line. So with all this money or all this data getting put into it, Aladdin became so powerful that BlackRock would actually just sell access to the information. This is a huge in-demand thing, and a lot of Wall Street firms were flourishing because of the access to data that they were allowed, through access to BlackRock. So with this demand, Larry just decided to take BlackRock public. For those that don't know, an IPO or initial public offering is basically putting your company on the stock market. So you get a ton of money in investments, and people kind of look at your company a little bit differently because it's traded publicly, and people can put money into it and trade it and all that kind of stuff. So this gave him a ton of capital. And around Aladdin's 18th birthday, Larry was able to buy the asset management branch of Merrill Lynch. Now, this is super important because Merrill Lynch dealt with a lot of stocks at the time. So as of before, it was mostly bonds and other kind of analysis. Now he was diving into the stock market a lot more. And he had access to a ton of information that was through Merrill Lynch that he wouldn't be able to get otherwise. But now that he was working with the bank this closely, he was able to feed Aladdin a lot of information on the stock market. And yeah, around this time, Aladdin, along with his two biggest rivals, Vanguard and State Street, my bad, they now own 40% of all public listed companies in America. 40% were controlled by three of these computer algorithms. It's crazy. So, a few years later, the recession hit. The recession of 2008, and Aladdin was so powerful that the Federal Reserve and Treasury relied on it to allocate their $30 billion rescue package. This was something where it was. I mean, they were tied so closely. Everybody was lost around this time. They didn't know what to do. And Aladdin just seemed to have the sharpest technical analysis of what was going on at the time. So the Fed kind of just turned to Aladdin to make all these decisions. And it wasn't only America, it wasn't only the Fed, it was the whole world. There's $2.5 trillion of newly printed money around the world. And basically, what Aladdin decided to do was allocate it towards bonds and funding to prop up the mortgage companies, which, as I mentioned before, they were already into this kind of mortgage, this kind of niche of market. They were already in this mortgage. So it's putting a lot of money into what it's already, its strong suit. It's just kind of doubling down and putting all this money into what it's already good at. So around this time, around 2013, so I guess this is 5 years after the recession, after everything kind of cleared up, the housing market got back to the basics, all that kind of stuff. The assets that were controlled grew to $11 trillion. Now, at this time, it was no doubt that Aladdin was they were running stuff. I mean, they were tied with the Federal Reserve, literally the printing of money. They were tied into that. So it was undoubtedly. I mean, they were dominating bonds and equities. But there was a new kind of thing that was popping up that was getting common, and it was ETFs. This is important to note because I'll talk about it in a second. But yeah, so years down the line in 2017. Larry, who, if you don't remember, he was the dude that started everything. He started BlackRock. He launched Monarch. Now, Monarch was an interesting project because it kind of turned against everything that BlackRock stood for. This involved firing his own fund managers and replacing it completely with Aladdin. So anybody that worked for his company, I shouldn't say anybody, but most people that were high up. I mean, you're talking about people that have had authority in this company within a long time, they're just getting fired just like that, bam, bam, bam. And Aladdin's taking over, and Larry's not even allowing it, but incentivizing. He's saying that I want Aladdin to run the show. And then yeah, fast forward a few years, so that was 2017. Fast forward a few years in 2020, the Federal Reserve turned to BlackRock and Aladdin once again. Obviously, we saw COVID, crazy time. It was also very unprecedented. It wasn't really a housing market burst like we saw in 2008, but it was kind of everything. Everybody had to stop work, and it put a reset on the economy. So, as we know, we printed a lot of money. We had $4 trillion of newly printed money. Um, and where did this money go? So as I mentioned, Aladdin was diving into ETFs. A lot of this money went to ETFs. So Aladdin is allocating in probably for the best of the economy for the market, because it has all this insight. It really knows what's going on. But Aladdin is just so far ahead of the game that they control what's going to rise, in a sense. Where as you saw before, and then you see now, anytime it gets money, it's just putting it into where it already is putting money. So ETFs became a huge, widely popular thing, and a lot of people were questioning like, hey, is this the most ethical way to be putting our money? Should we be having people that we, people, physical members of society, should we trust those, or should we trust the computer algorithm? And it is a huge debate, but it kind of got swept under the rug because it happened. It happened. Who cares, right? And a lot of people were saying that BlackRock is now the fourth branch of government because they were tied so closely in 2008, and then they turned right back to them 12 years later in 2020. That they're kind of wondering, hey, how closely connected is the federal government and the Fed, the government, and Aladdin and BlackRock. So yeah, a lot of questions were asked, and for a lot of people, it's like, what's the concern? I mean, all this stuff's just happening under the radar. I don't really care. It's not like my jobs are getting taken. I'm not a hedge fund manager. I'm not working at Wall Street. But this is actually affecting a lot of what's going on in your daily life. Let's talk about the current, the present, and then let's talk about the future of BlackRock and Aladdin. So recently, BlackRock acquired eFront. Now, if you don't know what eFront is, it's a huge data mining website. It has a ton of information on like what we purchase as consumers, real estate, all that kind of stuff. So they now have a lot of access to the global real estate market. And as you can imagine, the amount of capital that Aladdin has to play with is just unthinkable. They don't like, what's an interest rate? They have the money, they're good for it. So when you have somebody like Aladdin competing with single family home, a family that's trying to get a mortgage to get a house, it's not even a competition. I mean, Aladdin can take this any time of the day with the analysis that they have. And it's not, I shouldn't say Aladdin, it would be somebody that's using Aladdin, like leveraging Aladdin's insight, so it'd be a company probably more local to your area, but they're leveraging Aladdin's insight to basically steal this home that would have been bought by, a single family just trying to get a mortgage for a home. So this resulted in home prices rising 20% over the last few years. I think there's a lot of other things going on. Obviously, the supply chain disruptions that we saw, all that kind of stuff. But this is undoubtedly raising house prices. They are going from the ETF market to the real estate market now. And I think that they could have a lot of responsibility in this housing crisis that we're going to see coming up maybe later this year. And yeah, they're taking players like Zillow out of the market. I mean, big players in the industry. Aladdin's just running right over them just because of the amount of capital and the amount of insight that they have, the prediction power that they have. They don't even have competition. What is competition to them? $21 trillion in assets. And then finally, I want to leave it on this note because this is also kind of an unsettling, chilling thing. The Biden administration recently appointed Brian Deese, who was the global head of sustainable investing at BlackRock. My bad, global head of sustainable investing at BlackRock. He recently appointed him as the director of the National Economic Council. Crazy stuff. So now we have people from BlackRock literally working in the government, which is crazy stuff. And then also down here we have Adewale Adeyemo, former chief of staff to BlackRock's chief executive, is now the top official at the Treasury Department. So not only, I mean, we have the Treasury, we have the Fed, we have the Economic Council. I mean, we have a lot of BlackRock involvement within our government. And this is crazy stuff. It raises a lot of questions, a lot more questions than answers. And yeah, what does the future look like? How closely tied do we want to be with this computer algorithm? And where is the stopping point for it? I mean, it's finding all these new markets and just taking them over. I mean, no ifs, ands, or buts. It's stealing a lot of jobs. You think about the evolution of the stock market. Back 30, 40 years ago, you had to call somebody on Wall Street to place a stock order. Nowadays, you can't even, I mean, I think 70% of all trades are made just on a computer algorithm. Nobody even touches a button. No physical person is touching a button. So you see the quick development of what's happening, and you just have to wonder, is this what's going to happen in the real estate market? Is this what's going to happen in our ETF market? All that kind of stuff. And it's crazy stuff. It's a bit unsettling, but at the same time, I think that it raises a lot of potential for people to utilize it. It's just my biggest concern is with eFront and all the access to information and just your typical consumer. They just have a lot of information that they're compiling together, and we're seeing AI become, premier. I mean, they are the pioneers of what's going on in most jobs that are going to happen in the future. Just crazy stuff. But that's about all I have for you guys. I really appreciate you all tuning in and sticking around to the end. If you have any questions or concerns, feel free to leave them down below. I'll be answering all the comments. So yeah, I appreciate you guys spending some time with me. Have a good one.